In today's video, we're talking about the necessary, common, and important things a beginner trader should know whenever analyzing the market, be it the crypto markets, the forex markets, the static indices markets, whichever markets you are trading. These are the common things you should know or do whenever you want to analyze the market. Firstly, there is a support and a resistance level. Let's call this level our support level and this level our resistance level. On any time frame, there is always a support and a resistance level. Be it the weekly time frame, the daily time frame, the 4-hour time frame, the 1-hour time frame, 30 minutes, 15 minutes, 5 minutes, whichever time frame you are trading or whichever time frame you are analyzing on, there is always an important thing, a necessary thing you should know or do. Firstly, there is a support and resistance level. What are support and resistance levels? Support levels are like the floor of the market, while resistance levels are the top of the market, like the roof of the market. There are levels at which the market's trend stops, or there are levels at which the market gets to and reverse. So let's call these levels our support and resistance levels. Then in these support and resistance levels, we have trends in them. We have uptrends, downtrend, and consolidating markets in them. So let's give an example of an uptrend. You can see the market is creating something like this in a candlestick chart. You can see the market creating something like this. Then on this our market move, we have another opposite move of this particular direction. Then we have another move again. So these are called trends. So whenever we spot our support and resistance levels, we identify our trends, we identify the trends in them. We can see there's an uptrend here and there's a downtrend here. So in those trends are where we get our trading opportunities, where we get our buy or sell trades, where we see the current market direction. So how do we trade these trends? We follow up the trend, or we trade against the trend. It's either we are following the trend direction, or we are trading the opposite way. Trading the opposite way could be waiting for a breakout of the trend. At this point, we got the market doing what? Giving us a reversal at this point. So what we'll do is to wait for the market. What a beginner trader should do is to wait for the market to give a break and retest of this particular trend. Then the trader would catch the sells, catch the downtrend move. So at this point of resistance level, we can assume that the trend is coming to an end because it got to a level, it got to the roof or the top of the market. Then definitely there should be a change of direction, which we are getting the downtrend. So at this floor of the market, we are assuming that the trend is coming to an end. We'll be trading the opposite direction of the trend. Then we'll be looking for a break out of this trend, then a retest of the trend. We'll be taking the buys in the market. So how do we trade the trend? We follow up the market direction. We are trading the support levels. We are buying at these support levels. Whenever trading a trend, there is a support level and there is a resistance level. This is the support of the trend and this is the resistance of the trend. So as we got to the resistance of the trend, we'll be selling off from this point, or we'll be buying off from the support of the trend. Doing the same thing applies at the downtrend. We are buying at the support and we're selling at the resistance of the trend. So this is the resistance of the trend, and why this is the support of the trend. I'll be showing you guys a typical example of this our sketch or our drawing looks like on a candlestick chart. So you can see at this point, we got the market creating resistance level at this point, and we got the market creating a support at this point. So we got the market creating support at this point. So in this support and resistance levels, you can see the market is creating this uptrend, which we identified on our drawing. These are market formations. These are market structures on which we should take note of, be it a beginner trader or intermediate trader. These are market formations you should take note of, that whenever you see a support and resistance levels, in those levels, spot the market's highs and lows, like the market support and resistance levels on any time frame, then spot the trends in them. So as we got to this point, you can see that we had the market creating this uptrend and a downtrend. So you can see we have spotted or identified this market formation, which we did on the sketch that we explained. So you can see the market is creating this market structure. So how do you look for opportunities in this market formation? You can see we got a support level at this point. We got the market buying off from this horizontal support. We got the market buying off from this horizontal support, then our trend support. So on this uptrend, we are mostly focused on buy opportunities, because you can see how the market gave us a nice move to the upside, then came back to test this our trend line and continued its bullish move. because on uptrend there are higher chances of getting buy opportunities, and there are higher probabilities of seeing our buy trades going our way because of the market direction. Because you can see at this point the market has more bullish candles. You can see there are more green candles to red candles. So we look for buy or sell levels on these our trends, because you can see the market got to this point, bounced off, came back to this level again, bounced off. Then we will assume that the market has broken its horizontal support resistance, because the market acted as a resistance here, sold off from here, came back to retest this level, sold off. Then we had a breakout of this level. Whenever whenever a resistance level is broken, it turns to a support. So on how we got the breakout of this resistance level, you can see the market coming back to test this our support trend. So on the market testing our support and the horizontal and our trend support, we can see the market giving us what, a nice move to the upside. The same thing happened at this point. You can see our horizontal support here. Then you can see the market giving us a break out of this what, resistance level. Then level turned to a support. So the market gave us a breakout of this level, came back to retest this point and our trend support. Then you can see the market giving us a move to the upside. The same thing applied to this point as well. So these are the basic things a beginner trader or an intermediate trader, whatever trader you are, should know whenever analyzing the market. These are the things we should take note of: our market structure, the highs and lows of the market, that's the support and resistance of the market. Then we spot our trends inside the market formation, the market highs and lows. Then we spot or identify the uptrend and downtrend in those highs and lows, in those support and resistance levels, so you can take advantage of them. You can see the market giving us an uptrend move as well, breaking above this resistance level at this point, giving us a retest of it, then a move to the upside, the continuation. There are higher chances of buy opportunities in an uptrend than sell opportunities, so it's best we follow the trend, like we work with the trend, buying in an uptrend and selling in a downtrend. That's why we can have high probability of the market going our way. So thank you guys for staying through to the end of the video. Also, to my new viewers, you guys should do it to subscribe, and to my returning viewers, shout out to you guys. You guys are the OGs. Let's keep doing what we do, guys, and do have a wonderful day. Peace out.